Good afternoon, friends. This is unexpected. Tax refund checks are already going to thousands of Americans, but many are being shocked with reduced payments compared to last year. Top experts have announced a few reasons why this is happening and how some households may be able to fix this. My dearest friends, I'll be sharing with you what you need to know. So please make sure that you watch until the end of this video. Also, every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter the weekly giveaway, friends, do make sure that you click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways.
Gentleman, New York is now recognized.
Mr. Speaker, I yield 2.5 minutes to my good friend and colleague, the gentleman from New York, Representative D'Esposito.
The gentleman from New York is recognized for 2.5 minutes.
Well, thank you, Mr. Speaker. We've been in this chamber for a few minutes now, and we've been reminded at least 3 times with fancy posters and words from my colleagues on the other side of the aisle about how we got here. Clearly, we know how we got here, and that's why we're trying to fix it. We've also heard that, we don't want to support this because it's only 1 year, and we've heard offers of 2 years. We just got past the Super Bowl, and I'm pretty confident that every play in football, you don't get to throw a Hail Mary and score a touchdown or run a 90-yard run back into the end zone. Sometimes you need to make your way down the field in order to score that touchdown, and that's exactly what we're trying to do here. We're trying to bring relief back home for the marriage penalty elimination. And my constituents in New York's 4th Congressional District sent me here to Congress to provide meaningful tax relief to local families. And the SALT Marriage Penalty Elimination Act will do exactly that. This important bill would double the state and local tax deduction for married couples from $10,000 to $20,000 for the 2023 tax year. This would allow middle-class families to receive tax relief when they file this year. The Tax Cuts and Jobs Act wrongly penalized married taxpayers at the $10,000 cap. Was implemented for single taxpayers as well for married couples who filed jointly. Married couples were further penalized with the establishment of a $5,000 SALT cap if these taxpayers filed separately. The SALT Marriage Penalty Elimination Act fixes an anti-family policy and will help middle-class families across New York and the country. Since my first day here in the House of Representatives, I advocated for lifting the SALT cap, including as current vice chair of the House SALT Caucus. This bill is an important first step to deliver needed tax relief for constituents and ultimately removing the SALT cap. We've heard countless stories of Americans who are suffering from sky-high inflation due to the Biden administration, rising gas and grocery prices, and out-of-control spending. We must advance these policies. And just the other day, Leader Jeffries sent out a tweet that New York Republicans were sent here to provide SALT relief, and they have failed because it wasn't in the tax package. Well, ladies and gentlemen, it'll be on the floor just today, and we look forward to Leader Jeffries and others supporting this for New Yorkers and this country. Mr. Speaker, I yield back.
Tax season started 3 weeks ago, and the Internal Revenue Service has so far processed more than 25 million returns. Every year, as tax season rolls around, there's a sense of anticipation among millions of Americans awaiting their refund checks, often called the biggest payday of the year. A tax refund essentially represents money that rightfully belongs to you, withheld from your paycheck by the IRS throughout the year until you file your taxes. It is the excess amount that you've paid to the agency, allowing the government to use it while it sits in limbo until tax time. Some argue that if your refund amounts to, say, $3,000, that's money you could have had access to throughout the year, instead of the government holding on to it. Conversely, there's an opposing viewpoint that having the government manage this money is not necessarily detrimental. This perspective suggests that it aids in saving practices, ensuring that individuals end up with a lump sum at tax time rather than frittering away at smaller amounts throughout the year. Determining the optimal financial strategy in this regard is contingent upon individual comfort levels. Critics of the large refund approach argue that by allowing significant amounts to be withheld from paychecks, individuals are essentially surrendering a portion of their income to taxes, which could have been utilized for daily expenses, savings, or other investments. Some taxpayers take an even more proactive approach by intentionally aiming to owe the IRS money each year. However, experts say this tactic carries risks, as the IRS imposes underpayment penalties under certain conditions. Mark Stieber, the Chief Tax Information Officer at tax preparer Jackson Hewitt, notes that many eagerly anticipate their tax refunds as a substantial windfall. According to a recent survey conducted, a considerable number of recipients allocate these refund checks toward savings, debt repayment, or everyday expenses. Despite the allure of a sizable lump sum, proponents of adjusting withholding argue that having a little extra money in each paycheck can be more beneficial in the long run, offering greater financial flexibility and potential for immediate use. Experts say to better understand your tax situation and potential refund or owed amount, utilizing tools like the IRS Tax Withholding Estimator is recommended. This estimator requires pertinent financial information, such as pay stubs, tax returns, and deductions, to provide a reliable estimate. Your age, marital status, and how much income you earn outside of Social Security benefits all have an impact on whether you need to submit a tax return to the Internal Revenue Service. So even if you are not required to file, it might be a good idea if you want to receive refundable tax credits or a refund for income taxes you paid during the year. According to CNET, your Social Security benefits may be taxable if one half of your Social Security benefits, plus all of your other income, is greater than the base amount of your filing status. Other forms of income include wages, self-employment, interest, dividends, and other reported taxable income. CNET says that one way to understand whether your benefits are taxable is to consider gross income, which is your total earnings before taxes. If you had federal tax income withheld from your pay, or if you made estimated tax payments in 2023, you may want to file a tax return this year. You could receive a tax refund of any surplus withholding. Another circumstance where filing is encouraged is if you qualify for tax credits that provide you with refunds, including the Earned Income Tax Credit, the Child Tax Credit, or the Child Independent Care Tax Credit. The Earned Income Tax Credit is fully refundable. That is the end of my daily stimulus update video for today. My dear friends, thank you so much for being part of this community. Every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please do make sure that you click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning these giveaways. Thank you, and have a wonderful and very blessed week.